March 1st, market analysis, Stan Ehrlich, and Friday. We always start out with stock market indexes. Nothing different this morning, and we're going to go into futures after that. Now, the S&P 500 daily data chart, we're in a little bit of a rout here the last couple of days, which I did not expect. I thought we were going to have more of a downside correction. But here's the thing. We're overbought again. We just got overbought in the last hour on the Spider, and it's the first index of the various indexes that I follow that's now overbought again. So I think there's still some sort of a top building. I will try my best to tell you on the day that it turns that it's turning. The last signal worked out for just a couple of days and it dropped down. And again, I've been mentioning off and on that these signals, although they're built on purpose to pick top and bottoms to the day, and they do frequently, they don't always. And they are sometimes part of the topping out or bottoming out process. So that's what may be developing here. And now that I've got an overbought condition for the Spider, I have a little time in order to have another bearish engulfing, which will be an official signal. This is good if I'm looking for ER sell signals. We're very close to being overbought, but not quite as in the other indexes. And if they become overbought, I'll certainly mention it as well. Next chart. Oh, by the way, the downside correction, I think for the Spider, 478 looks very plausible, but that's my maximum in this green zone. But there are 2 or 3 other levels on the way down that look plausible as to where the market is going to stop dropping. So, and I'm not bearish. This is a correction in a longer term bull market. I think this month might be a correctionary month, a little bit of a down month. Okay, next chart. This is the 1 minute Spider, and it's 6:30 California time until current, and it only just got overbought. What about half an hour ago? So really strong rally here for the last couple of days. Again, I'm talking bearish talk at this particular point, and that was not good. Support ended up holding. Blew through the top. Next chart. E-mini, and again, you can reach me at info@ersignals.com. E-mini is doing about the same thing as you would expect, so there's not too many other things I can say about the E-mini. I did want to mention that there's a gap in the Spider here, and that gap is down to a low part of the gap, the bottom of the gap, 497.30 to 502.80. So fairly sizable gap several days ago when the market gapped up on the Spider. But again, the E-mini doesn't show that because it's 23 out of 24 hours a day trading, hardly closes, but only for 1 hour. And that's why there's no gap there. That's where it would have been. Now, that doesn't change too much. Still support at that level, and then the bigger support. That's what I'm looking for. And this is acting a little bit overzealous, a little over exuberance. Next, we've got the 30-minute chart on the E-mini to give you a perspective here of the last about a month, a little bit more of activity. Every time the market started to show signs of dropping down for a day or two, it held, turned into new high ground, got overbought again, turned down again for a day and a fraction, held, tried to make a new high, couldn't quite do the trick, but did not make a lower low a couple of days later, and then zoom to the range we've been in or were in for the last week or so, and now it's doing that pop again, stair-stepping its way up. But that can't last forever. Next, QQQ. Same comments. What can I say? Not quite overbought, but getting real close. 72.41 at the moment, and about the highest RSI levels we've seen since the last time it took a quick break. Next, NASDAQ is going to be about the same, although, different price ranges. 71 right now on the overbought scale. So I like 75 and higher. So the last time we were at 75, the market did start to drop off, but only for, short downside correction. We made good use of that 3-day break. I remember that, and the detail of that trade. I thought I had that here. I guess I don't, unless I pull this to the side here. Oh yeah, we do. Yeah, that's when we had that trade. Back on the 16th, 19th, 20th, 21. And then in the last half an hour of the 21st of February, it not stopped us out of our last position and just kept on running after that and hasn't stopped yet. But this looks to me like it's too much, too quick, too fast, too good. Next chart. We're going into bonds. Interest rate futures are now in short-term new rally highs. This could be something particularly significant. Now, I didn't get any buy signals when it made this rounding type bottom here in the last couple of weeks, unfortunately. But as you know, I'm bullish on interest rate futures, intermediate and long term. I was just looking for another leg down, like in the stock market indexes, but it hasn't done it. And now I'm going to have to be a little bit more neutral to bullish in general, and not getting any sell signal and not overbought leaves a significant amount of room for a pretty good rally, maybe up to 123. Next, notes, same thing, 10-year notes. So the rally could easily get back up into this resistance at about 112. Yeah, 112 something. Another point higher. And how that develops and what happens immediately after that, we could keep going. Next up, I meant crude. New highs today in a resistance area and now getting a little bit closer to overbought, but really not there yet. And I have to say, I would expect the top of the resistance area to be challenged now at 82.70. That's the best I can come up with. Too bad we didn't get any buy signals in the last particular lows. And this particular market, crude oil, has not given us a lot of great signals lately. Nice to have a red on top on that one, and there was a little profit on that trade, but not much. Okay. Great signal on the high here in heating oil just a few weeks ago. And prior to that, a small bearish one, but I'm neutral. We're between a rock and a hard spot, and I'll mention the same very complex technical terms of rock and hard spot again, because we've got a few markets like that at the moment. And the next chart is going to be natural gas. We did get an official buy signal 3 days ago. So far, so. Not particularly great. We have today being the last day, we might be able to add on to the trade in reference to a brand new ER3 long, but doesn't look like it's going to come down low enough, and that'll abandon the ER3 process. We still have an ER1 long, which is a very teeny-weeny loss momentarily. Stop is obviously the yellow dots down here. Next. We have this head and shoulder top trying to develop an unleaded gas, but today's rally is getting too high and the time frame is expanding a little too much to the right, and I'm now going to start to abandon this idea. I'll give it another day or so. I'll raise this up a little bit, but we shouldn't have broken, we should have started to work our way down. That could have easily started to work, but I was skeptical, for one thing, about the angle of the neckline. Should have been more like that. So I think this is going to fail, and we're not going to have a head and shoulder pattern on our hands. Next, wow, what a rally in gold. A little reminiscent of what happened a couple of other times in the last several months. Almost into the top of the resistance area, where it has topped out twice before, approximately. So I'm getting ready to expect a short-term downside correction. We are definitely overbought at 80.50, high and last, basically. Okay, next, silver. Very strong, no breakouts yet. Support area did hold, past tense. So now we're probably going to work our way back up to at least 2378, I would expect, which is not that far away. Probably happen this week. Next week. This is Friday, March 1st. And then into the next major resistance area, quite possibly, not out of the question, 2630. Neutral to friendly on silver. Now platinum failed to make a downside breakout stick. It got down slightly below the bottom of the support area and all of a sudden popped back up again, and now net higher on the day. This could end up being a pretty significant bullish engulfing candlestick. Not there yet, because it's at support and a pretty big range after making new lows for 3 months. That's a good potential beginning of a rally here today in the platinum. Next, copper. Outside trading range, slightly higher on the day, slightly friendly for a bullish engulfing, not very aggressive, bullish engulfing candlestick. I think the resistance is going to get tested again. 3.945. Excuse me, or a little higher. So modestly friendly short term because of this bullish candlestick that is popping out of nowhere, smack in the middle of the rock and a hard spot. Next chart, soybeans. Stalling out in oversold territory, going sideways now for a few days. But this sideways activity is well below a major previous support area, which is now resistance. So I thought, and I'm saying again, that we could easily have another little pop up into this little resistance area and then head south. So far, this looks very bearish, intermediate to long term. I would be looking for sell signals on rallies. Next chart. Meal, oil, and corn and wheat all have similar or very, very identical type of longer term bearish charts and expectations, except for a couple of minor rallies we're beginning to see. Here in meal, soybean oil, sorry, keep doing that. We're challenging support, we're hanging in there, but we're overbought within 5 days or less. So there's still a chance we could see a bullish engulfing if the close today gets back above yesterday's close. That would give me a buy signal in a support area. It would be a great signal, I hope, right where I would want it with the combination I love, but I'm not higher than yesterday's close. I need to rally 38 ticks on the close or more, of course, in order to get higher than yesterday's close. Then I will have a signal. Everything is there except the higher close. Next chart. I got that. Everything yesterday in soybean meal. We have a bullish engulfing. It was in support. This is identical, actually, except for the higher close yesterday to the oil. So meal did it successfully so far. We are long ER1, and there was a very minor, I think it could have been a few tick loss on ER1 scalp, but the overnight hung in there, and it's higher on the day now by $3.50, and that's good. It's starting to work out just fine so far. Our stop is starting to come up a little bit, but not very much so far. You can change that. You can raise the stop faster if you want, but I'm trying to get a little bit longer term trade out of this. Next, meal, 1 minute chart, and that's how we picked off the new long yesterday. The ER1 scalp did lose a little money. We're still holding the same exact entry and original price for the overnight trade, and that's going to the current tick real time. You'll see it move if the next tick occurs while we're watching, but I doubt it. Anyway, so far so good. Next chart. This is the corn, which we did get a bullish engulfing a few days ago, February 26th. And at the moment, it's stalling out a little bit. In fact, today's low came pretty close to stopping us out using this particular kicker, which is the speed at which the stop moves. It's close. I probably don't want to move it anymore until we make new highs for the whole move. Then it's going to automatically move its way up. But if it comes down and hits my stop, my loss will be very, very small, disappointing. But we'll see. There, it just changed. The little green line changed. Now, a different kicker. We're out of the ER1 position trade with a very small profit on the December corn, and we got stopped out this morning. Gosh, it doesn't look like a penny or two, and that was about it. And this is the December corn. Yep. No, that wasn't December. What am I saying? That was Z. I'm mistaken. May. Next, wheat. May. Buy signal also recently. So this one's particularly interesting. The reason is the wheat market bottomed out on February 20th, almost exactly at the previous low price that we had back on November 27th. That low, as well as the low about a week and a half ago, have been the lowest low since the war started 2 years ago, when we got on the high day, unbelievable, a sell signal in wheat, right smack on a series of limit up moves in a row. We sold a high day. So the bottom here now is a double bottom formation that's being jeopardized as we speak. The market's coming down pretty close to those two other lows. And if it closes below 353.50, I'm sorry, 553.50, then you're going to have a close lower than previous lows, and that could be super bearish or continuing this long-term bear market. I have to have a close starting to go up right away. And in order to talk about a broad double bottom formation in a long-term bull market, a close above this resistance area. Hey, it's just not coming. It's not happening yet. Next chart. December wheat. There's our trade in detail down at the 10-minute mark. Initial longs, day trade profit, longer term profit in a 2-day period, swing trade. Overnight, we bought the exact tick low on February 23rd, 568. Made a little tiny profit on the scalp, but only had a few minutes before the bell, so that trade lasted only a few minutes. The longer term one is disappointingly tiny loss, I think of a penny and a half or something. We did have a profit at one particular point. We could have tightened up our stop faster if you had been so inclined. I didn't. But basically, I didn't get hurt. I lost only a penny or so. So I'm disappointed more than anything else. Next chart. Cattle. Fantastic. Now coming up much better. I was very concerned yesterday. It almost stopped us out using this particular kicker number for that trailing stop. This is turning into quite a long-term trade since December 15th signal. And it's an ER3 long-term position that got into the trade on the last day possible. Good. Almost got stopped out, but not quite. Okay. Still got to be bullish in cattle, even though this resistance area so far has stopped the rally. I mentioned that yesterday in the last few days. So I'm worried it's still topping out, but I've got a little reprieve here for the moment. I need to break through the resistance in order to stay more bullish. But I think it's got some significant problems here. Next, hogs. Resistance testing again. Overbought again. I think it's going to turn around and start to come down real soon, maybe slightly higher in the resistance area. Next, we've got OJ, it didn't stay at, and I thought I was going to go into new lows. It popped back yesterday, but today it's continuing to show a lack of bullish follow through. And I'm still looking for a test of yesterday's low, which would probably push it through and drop to new low ground. I'm not going to be a darn bit surprised if OJ in the next few weeks, maybe the end of this month, is down to 282 again. Next, the blow off top in cocoa is still yet to be proved. Gosh, it doesn't seem to want to stop. It's almost high and last. Very strong. I'm trying to justify a turn down. There was one bearish engulfing, didn't work. And it's just too strong, too quick on a longer term basis to be able to justify a heck of a lot more of a rally. Put it that way. Next, coffee. Neutral, sideways, not much to say. Next, sugar, the sweet. Dropping in a new low ground. Probably going to drop off even more. I wouldn't be surprised to see it get down to 20 again, 1950 to 20 again. Don't see no reason why. That, if we get below 1930, is going to be even more bearish longer term. Next chart, cotton the rag. Little bit of a spike blow off top, dropping now for a couple of days. Not too dramatically, but pretty good. It's going to come back down to support here and maybe bounce off of our support zone at 93.50. And that is it. Back to the spider just to take a quick look. Doesn't want to stop. Still heading north. You guys have a great weekend. Talk to you next week.